Thanks for your patience, folks. Let's call this meeting to order and we'll do introduction. We'll start with you.
Dave Ryan, Controller. Mike Chadwick, Internal Audit.
Peter Roscoe, Internal Audit.
Dennis Reed, Municipal Attorney.
Lydia Sanders-Summer.
Cindy Mahoney, CFO.
Ellie Gray-Jackson, Audit Committee Chair.
Harriet Drummond, Audit Committee member.
Michelle Drew, McKenna Cottrell. Christy Teal, McKenna Cottrell.
Cheryl Fresca, OMB.
Thank you. Thank you. As you can see from the agenda, we only have one subject for discussion at this meeting, and that's our famous annual financial statement audit. And with that said, I was fortunate enough to come down yesterday and get copies of the report to the audit committee and the management letter, which I had an opportunity to read last night. I'm sure nobody else has had that opportunity, but that's fine. That's why you're here. I'm going to give the floor to you, Michelle.
Think about this about
the audit.
Okay, thank you. So I actually have a number of documents in front of me, and as LV alluded to, the first thing I'm actually going to talk about is the report to the audit committee. Then we'll move into the management letter very briefly, the single audit, and then finally the actual financial statements. What I'm going to do is actually, I don't know if everyone has it with you or in front of you, but I'm going to go through this very quickly. As you know, the auditor's responsibility is not to recreate or reperform 100% of the transactions of the municipality. That would be incredibly difficult and cost prohibitive. So it is the goal of the independent auditor to perform sufficient review of your transactions in order to come to a reasonable assurance that the financial statements are correctly stated in accordance with the accounting rules. So the critical element there is reasonable rather than absolute assurance, which just sort of leads into the whole theory that we do use sampling techniques. We apply control risk based analysis to determine if we do a sample test and it works properly, then we can have pretty good confidence that that same process is working effectively throughout the city. The other thing on the first page of this document is that financial statements inherently do include certain estimates. Not every transaction is 100% black and white. Not every transaction is this is a purchase. And for example, one of the key estimates in your financial statements, there are some environmental remediation liabilities. Those liabilities are estimated in accordance with the process that's been established, and it is a reasonable process. But you won't actually know the final outcome of that number until the final outcome of that number. So. Over on the next page, and why I'm going through this audit committee presentation, actually, first of all, is because professional standards actually require us to communicate this information to you. Now, I'm sure what you really care about, I'm sure you care very much about the financial health of the municipality and what the actual numbers say, but every auditor everywhere, no matter who your CPA firm that you're working with, has a certain set criteria of information that needs to be communicated. And the purpose for this is not just to get to the end and say, this is what the final number is, but as a matter of process, this is what we experienced throughout the process, this is what we found, and this is how we found management to work with. Because at the bottom line, although we really have to work very closely with management, certainly with the controller division, as well as the finance department, but also other treasury, PM&E, transit, regarding other pieces of the audit. At the end of the day, we ultimately work for the assembly, and for the audit committee specifically. So over on page 2 of this document, we have a couple of items. I'm actually going to go a little bit out of order. The first item is a restatement. It's in the middle of the page. At the outset of the audit, when we showed up, the controller disclosed to us that they had actually found an error from the prior year financial statements, and this error has to do with the recording of certain capital assets and infrastructure. And what basically has happened is, as projects are approved, they're actually set up as projects in the system for budgetary tracking purposes. At the end of the year, those projects are analyzed, and anything that is a completed project gets placed into service for assets placed in service, and anything else that's living in those funds at the end of the year goes into projects in process, or what's called work in process. So at the end of last year, and this is the way all of the CIP funds, the capital project funds, work. At the end of last year, one of the items that was included in those capital project funds were actually a significant amount of activity in progress related to roads. And because the municipality, although roads are clearly a big ticket infrastructure asset item, the municipality elected at GASB 34 conversion back in 2000 to employ what's called the modified approach. And under the modified approach, the city does not actually capitalize roads unless there are significant new lane miles created. So any project that has to do with a refurbishment of an existing road actually does not go into newly created capital assets. So as a result of them going through the review at the end of 2009, there was about $40 million worth of in-progress activity associated with various roads projects.
Excuse me 1 second, Michelle. I hate to interrupt you, but I'd like to recognize Mr. Hall and also our clerk, Barbara Gornstein. Thank you.
Okay. So at the end of last year, there was about $40 million worth of road projects in process that was in fact recorded to work in progress. But as I mentioned, due to the modified approach, technically those shouldn't have been sitting in work in progress at the end of the year. So management disclosed this to us right out of the gate. We do agree that it was improperly recorded to work in progress. So they have actually restated 2009. A couple of key elements here. In context, this was a $40 million worth of construction in progress on approximately $3 billion worth of capital infrastructure. So although it certainly meets the materiality test because it's quite a large number, relative to the capital assets in the aggregate, it doesn't particularly result in a huge misstatement. I mean, it's a big number, but relative to $3 million of assets, it's not, you know, a gross percentage of that total. And the other thing is, this has no bearing whatsoever on the fund level financial statements, the capital project fund accounting, or on the budget in any way. It only affects the government-wide financial statements. So then the two items that precede and follow that particular issue within the audit committee letter are the audit adjustments and uncorrected misstatements. And for the purpose of this year's audit, in going through the transactions that we looked at, we did propose, and the municipality management did record, 2 adjusting journal entries. One was the recognition of revenue and receivable for grants in the airport fund, and one was for an accounts payable accrual at Anchorage Water and Wastewater Utility. And on the uncorrected misstatement side, as I mentioned briefly, we are to provide reasonable rather than absolute assurance, and due to the complexity of actually pulling the numbers together to get a CAFR in place, professional standards do allow the municipality not to correct noted errors if they deem that it doesn't result in a material misstatement, and a reasonable person looking at the financial statements would not make a different decision or come to a different conclusion from the numbers if those adjustments weren't made. So this year, there were some past adjustments, and they are spelled out on the very back page of the audit committee letter. In short, there was one accounts payable journal entry for the general government side.
What page are you on?
It's the very last page of the audit committee letter. Yeah.
Oh,
yeah. But just in short or in summary, these entries translate to one accounts payable journal entry for general government side, one past accounts receivable entry for ML&P, a past entry associated with CIAC from water and wastewater, and that one is an ongoing, it's just a correcting, amortizing over a period of time. That one's going to go away in 2014. And then the effect of reversing entries. So in the aggregate, we're basically talking about 3 current year past adjustments. And again, in putting this into context, in 2008, the accounts payable past adjustment for general government was in the neighborhood of $4 million. And for this year, it's $170,000, as well as the entry that was posted on the AWU side, it was 1 invoice. So in terms of from the standpoint of required disclosure, we're required to disclose that there was a past adjustment, but that really is phenomenal improvement from a 2-year period to go from $4 million in numerous unrecorded accounts payables down to a single invoice that wasn't accrued. And that is pure testimony to management really enforcing at the end of the year, making the departments get all their invoices in, calling the vendors and getting things done. So that's quite an improvement.
Thank you.
David Ryan, thank
Yeah.
you.
Thank you.
Just for the record, I'm still mad at the person who didn't. I really wanted that to be 0 this year.
At 170 was
So are they still with
no,
us?
it was no.
Pardon me, yeah, they're still with us.
Good.
But they learned their lesson.
That's great, that's great.
It was, we were so close to 0. We were sorry. So close.
So on page 3, there's a section for accounting policies and alternative treatments, and I'm going to again touch on these briefly. I want to emphasize that what I'm about to talk about are what we consider to be significant or unusual, but I want it to be perfectly clear. Significant and unusual does not mean bad, and it doesn't mean incorrect. It just means it's large or a little bit non-standard. So the first one has to do with MARAD. I'm not going to talk about that because that one's really just a repeat of last year that you do. As you all know, you have the big port project going on dealing with MARAD. And a lot of money has been advanced to them, and they are primarily managing that project. It's a little unusual because we've never had another client who's had that kind of money just sent off to a third party. But again, it's not wrong, and the accounting treatment, as far as it's reasonable in the circumstances. The next 2 items also have to do with the port, and the first one has to do with mitigation escrow. At the time the port project was established, as a condition of the permitting, the municipality was required to set up mitigation escrow accounts. Now, at the outset, the mitigation escrow accounts were actually internally set aside funds for EPA environmental remediation. In 2010, what changed is that the municipality was requested and did comply with the Corps of Engineers' request to actually send those escrow funds off to a third-party escrow agent, and the municipality did comply with this request. As a result of moving the money outside of the ownership or handling of the municipality, the accounting entries to record this basically meant cash had to be reduced and something had to be debited. And after discussions with the port and their own internal review, their assertion is that those mitigation funds were really a cost of permitting, and permitting was a condition of the project itself, and therefore those should be part of the cost of the project, and we do concur with that. So that was something that was a change from last year to this year, because it's about $6 million that was on the books last year that's now been capitalized into the project. And then the next one is also just a little bit unique, and again relating to the port. As a general rule, debt issuance costs are to be capitalized and then written off over the life of the debt. They get expensed commensurate with the life of the debt. In contrast, capitalized interest, construction period interest incurred, gets capitalized and written off commensurate with depreciation. So it goes with the life of the asset rather than with the life of the debt. The port has part of its financing mechanism is a commercial paper vehicle, and commercial paper by its very nature is short-term debt. So the technical accounting rules here would dictate that the cost of issuance should be expensed over the life of the debt, which is current, which would make it short-term. However, in a lengthy discussion with the port, their belief is that the commercial paper cost of issuance are merely a replacement for interest expense that would be incurred if they were to convert the short-term debt to long-term debt. The municipality has demonstrated both the ability and the intent to continue rolling this debt. Now, we would have a different feel about this if the commercial paper was issued and then had to be paid off. we would probably disagree with this treatment. But because the commercial paper has been able to be consistently renewed, it really effectively is being treated like interest expense. And because of this, it is reasonable to go ahead and allow those costs also to fall into capital to be, again, part of the project and then subsequently depreciated over the life of the asset.
Can I ask you a question?
Thank you.
The mitigation fund, is that specifically set with the port expansion project? And as such, the requirement for the mitigation would go away when the project is done?
It was a condition of the permitting, and there is, I believe, one more payment post 12/31/10. So there was one more payment in 2011 that fully satisfies that obligation. But the escrow the money was basically set aside into a private account. In 2010, that bank account, as it were, was transferred to third-party control or jurisdiction. And I do believe that the Port of Anchorage, I believe the city manager, the Corps of Engineers, as well as the third-party escrow agent, which is, I think, Great Land Trust, they now, I believe, have a committee that dictate the use of that money. But that money is no longer in the municipality's control. Did I answer your question?
Not entirely, but it sounds like it's a question that should be asked internally rather than to you, because I just wasn't aware that that even existed. And so I was just wondering if there was some reason that it was separated out, some concern the Corps had, and or if potentially we get that money back at some point.
You'll never, I don't believe you will ever get that money back. And this is not actually an unusual situation for the kind of project that you're doing, which the project that you're doing is fairly unique.
Okay.
But whenever there is a project that impacts wetlands, and clearly because you're working at the port, the port is, right, it's actually impacting the sound or the, whatever. So whenever you have a project that impacts a wetlands area, then the EPA does require mitigation reserves to be established.
So it's basically gone.
Yeah, it's gone.
Okay.
It's gone. And it's not unusual. It's not atypical in any way.
We use some of that money on the Camp Creek Estuary project, for example.
Okay, thank you.
Okay. And then finally, on the last page, there's one more bullet point having to do with a transaction that occurred between Solid Waste Services and the Water Utility Fund. Again, significant, unusual. We point this out. It's not weird and it's not wrong. The reason we point it out is because as auditors and as accountants, we look at your internal transfers when money moves from one fund to another fund or one department to another department. We look at those very closely. And as a rule, they should always match. But what's actually happened here is Solid Waste Services ended up paying for a project in excess of the cost. AWU then refunded the money back to Solid Waste Services as appropriate. But from the transfers perspective, it's a little disconnected because AWU follows regulatory accounting. And so on their side, it doesn't show up as a transfer out. It simply reduces CIAC, which is a regulatory account. So it causes a mismatched transfer, which is why we point it out.
Michelle, what does CIAC stand for?
CIAC is Construction in Aid of Contributions in Aid. Thank you. Contributions in Aid of Construction. Yeah, and basically it's whenever somebody makes a payment that funds capital. When someone else makes a payment that funds capital for regulatory and rate making purposes, it goes into a regulatory balance sheet account rather than affecting the income statement.
Thank you.
Yes. The next item on that, disagreements with management. We had no disagreements with management over the application of accounting principles. In fact, we had no disagreements with management. The teams that we worked with across the municipality have been very cooperative, and everyone has been really great in terms of like getting prepared, getting ready, and being cooperative with our team, who tends to be a little invasive. I mean, we ask a lot of questions and we cause a lot of work disruption, so we definitely appreciate.
Well, we've been on it for many years, so they're used to it.
Yeah, they know. And then finally, no other difficulties in performing the audit. So that's that. The next item is the management letter, and I just want to say we issue a management every year. It's, I believe, part of our contract requirement to point out any issues that come to our attention. These certainly do not rise to the level of a material weakness or significant deficiency. In point of fact, I would say these are pretty nitpicky items in the grand scheme. They're very low-key items in the grand scheme of things, but we do want to point them out because there is a small minor potential for a risk. 3 of these items have to do with information technology and access to systems, and rather than go through those in detail, I'm going to simply suffice it to say you guys already are well involved in a new research project and an RFP to examine and review a new accounting system, and as that proceeds, clearly there will be some review of all of your processes related to your information technology and how things are working and access to your system. So we're confident that this will be looked at on a go-forward basis in some detail. And then over on the next couple of pages, just again pointing out, there are some new accounting rules coming down the pike over the next couple of years. And by far the biggest of those is GASB 54, and that will affect your FY11 financial statements. And we've had numerous conversations with Dave and his team in the controller division, and I know Dave and Lucinda have talked about the implications and how this is going to affect the financial statements. So suffice it to say, it's coming, but your management team does have the process in hand to evaluate and make sure that the changes are made.
And excuse me for
Yes.
this. I know you and I, Elvie, had talked about doing a separate presentation either, I think to
That's on
maybe
my
this session.
agenda.
Yeah, so we can schedule that when you.
Yeah, I was going to mention.
Okay.
Yeah, thank you, Lucinda.
The next item I'm going to talk about really briefly is the single audit. And rather than go through this document, which is 61 pages of really microprint detail, we did just a quick little overview. And so with regard to so for those of you who might not know, your single audit is your compliance audit as it relates to your state and federal grant programs. Because the municipality does administer so many different federal and state grant programs, your audit is not only a financial statement audit, but it also must conform to something called government auditing standards, A133 standards, and state single audit guide standards. And those 3, Yellow Book for government auditing standards, A133, and State of Alaska, really ramps things up a notch. Because at this point, we're not just looking at the numbers, we're actually also looking at compliance with rules, regulations, laws, and grant provisions. So in 2010, the municipality did spend $73 million of federal grant money and $119 million of state money. And I did the little trend graph so you could just kind of see, notwithstanding the little dip from 9 to 10 on the state side, you know, except for that one dip from 9 to 10 on the state side, you know, you've got this growing trend of grants. Now I keep hearing out on the grapevine that federal dollars are drying up and state dollars are drying up, but that has not actually been the case for you guys. So your grant and contract programs are actually increasing despite the 2010 drop on the state side.
And these are operating and capital.
Yes, both. It's both. Over on the next page, so the good news is you have received an unqualified opinion on compliance. The goal of the auditor is to actually render an opinion. And so from the standpoint of a simple yes or no, did you comply with the rules and terms and conditions? The answer is yes, you did. So it is a clean opinion. And we have no findings under government auditing standards, which is the one I referred to as Yellow Book, specific to financial reporting at large. You did, however, have some individual grant program findings. There were 5 findings on the federal side and 1 on the state side, and those are spelled out in the next couple of pages. So the first one, 2010-1, procurement suspension and debarment, this actually has to do with actually notifying a contractor that this grant is funded by this program is being funded by federal dollars, and you must certify back to us that you're not on the federal blacklist or the debarment list. as I mentioned, you have a clean opinion because in the big picture, you have complied with all the rules and regulations. This is a very specific little detailed nitpicky violation.
And isn't this AWWU?
This one was AWWU, yes it was. So for our audit procedure, we went to make sure that the contractor in question was not in fact on the debarred list, which the contractor was not on the debarred list. So the violation is not that you did business with a debarred vendor, but simply that the appropriate box wasn't checked or the appropriate disclosure wasn't made. And the next two findings, eligibility, timely action, and retention of records, which is 02, 03, and 04, all three of those issues have to do with the child care grant program, the child care program. And I can tell you with some degree of confidence that our auditor who went over to child care, the audit program for that is very, very long, and it is very, very specific, and it is very, very detailed. So although the child care program does have these three separate findings, again, we're talking about one instance out of a sample of 60 where something wasn't done appropriately. So there was, and the specifics are actually spelled out in the document of if it was 1 out of 60 or 2 out of 60. But basically, something like one income determination was done improperly. The applications must be processed within 30 days. There was one that was 35 days out. They're very technical violations.
Ms. Osiander?
What are the implications of these findings? Is it potential jeopardy of losing the grant?
These, in the big picture, any violation potentially could put a program at risk. However, and I'm not trying to make light, because you have to run the programs in accordance with the rules. But these are very technical violations that the state would come in and say, okay, what are you going to do to fix this? We don't want you to keep recurring the same problem over and over again. But clearly, the state is better off by having the municipality administer this program with these minor violations than they would ever be taking this program away from the municipality. So while a finding could risk federal or state dollars, I do not believe that these findings would generate that risk.
Question.
Ms. Osiander, Ms. Drummond, sorry.
Did you say there was only one finding in each of these categories? Out of how many?
Most of the sample sizes are in the neighborhood of 60. So in a sample size of 60, it was like 1 violation or 2 violations. But that is actually spelled out in detail in this document. Yeah. And then the last one, retention of records, actually had to do with the fact that they could not locate one file. They simply could not locate the file. But because the rule says you must be able to produce all requested documentation, again, so very technical violations. And then the last one, 2010-5, allowable costs, salaries charged, had to do with the highway planning and construction grant. And this was an issue where within this grant program, the grant administrator was not authorized and was not signing off on the timesheets. Now, we don't believe that there was anyone improperly paid. We don't believe that there was any problem in payroll, and we did other payroll testing. So we don't believe that anybody was necessarily paid improperly. This was simply an issue of pursuant to the policy and pursuant to the grant terms and conditions, the program director is required to authorize and approve payment of salaries, and they weren't signed off on the timesheet. And then the very last one that we have, 2010-6, is on the state side, and this is having to do with the revenue sharing program. And basically and I'm going to tell you what I think happened. What I think happened is what year did you not get revenue sharing? 8, 9, 8? I think 2008.
Something like that.
Yeah, so revenue sharing dropped off one year. Prior to that year, this was, as it's standard protocol, it's always been written into the rule. And prior to that year, the municipality always did the notice to taxpayers. There was one year, 2008, I think, when revenue sharing dropped off, and you didn't get it at all. In 2009, the state reinstated the revenue sharing program, but they did not fully reinstate the same rules and conditions, I think, that had been in existence in the old rule. It's under a new authorizing statute, right? Okay, a new authorizing statute, and all the same terms and conditions didn't get reinstated. In 2010, those terms and conditions were reinstated, and not only reinstated, but was actually added back to the audit program that we're required to use. So one of the very specific tests is to go pull the municipality tax invoice, flip it over, look at the back side, and make sure that the notice to taxpayer was appropriately disclosed. And for the 2010 year that we're auditing, the bills that went out did not have the appropriate notice to taxpayer. Now, the 2011 bills just went out, and it has been corrected, and the disclosure is there now, so the problem is fixed.
And we retroactively disclosed. So, I mean, even though it wasn't there in 10, we went back and noted it so that we're in compliance.
In the 2011 bills?
So if you look at your bills, you'll see it.
And if I might, the older notices, if I recall correctly, actually cited to the older statute program. We just didn't update to the new statutory sites. And these provisions are really all about the state getting credit for giving us state money. So it's really more about the state letting taxpayers know, hey, the state participated in giving you this.
15 million.
So it's a showy thing more than a substantive thing.
Thanks. Ms. Osiander?
So I remember we had on the tax bill in red, this is for property tax relief from the state of Alaska, something like that. Is that what we're talking about?
Those were, I think, prior to this, because there was a new rule here in 2010, jump in, Michelle, and we didn't do it in 2010, but we specifically, and we treated revenue sharing differently.
Well, that was my question, is because of that big discussion we've had about how to deal with it. Is that any kind of a justification or?
No, I think we just missed it in the Treasury Department in terms of putting it on the bill.
And if I may, Madam Chair, because in 2009, the legislature really created a new program. It wasn't just a continuation.
Yeah.
And so it was new rules, and that's where it comes to the citation. We weren't the only one who failed to do it in 2010. I understand the North Slope Borough also failed to do it in 2010. So at least that's what we were told. So it was an oversight. Thank you.
So one quick question, so there's no penalty for failing to do it?
I don't think so. No, I don't think so. I think, again, and again, not to belabor the point, but in the grand scheme, Mr. Wheeler really hits it right on. This is about the state getting credit. This is not about the municipality misspent money or anything like that. So
passing information.
Yeah.
Understood.
So there were 6 findings this year, but again, all of these are really quite technical and very nitpicky. But again, if you look back to the front page of this document, on $73 million of federal dollars and $119 million of state expenditures, where there's no significant violation or misspending of money, so this is still quite good. And the municipality is administering something in the neighborhood of 600 active grants. So really, these findings are really small relative to the big picture. So there's that.
On the state expenditure side, does that include the money to the school district or grants to the school districts?
If the grants are reported on your schedule, yeah, I believe it does, because I believe you include all.
Yeah, it does, because we report
all of them.
on
We have to handle
behalf
them.
of the school district grants,
Right.
and so it runs through our controller's department.
And then the last thing, I guess, is the CAFR, 180 pages later of detail. On page, behind the tab that says financial section and on page 2. The first paragraph of that page is actually the auditor's opinion. And it just says, in our opinion, the financial statements materially reflect in accordance with GAAP. So that was very badly said. These financial statements are a clean opinion. It's an unqualified or a clean opinion, which again means we do believe that these financial statements do materially represent accurate accounting in accordance with the accounting rules. The next few pages of this document is the management's discussion and analysis. I'm definitely not going to go through that, but I do encourage you to read it. It provides a narrative description of what is otherwise spelled out in 150 or 60 pages of spreadsheets. It's just kind of that high level overview. And then over on the actual financial statements themselves, the first couple of pages, 18 and 19, are the government-wide financial statements. And I actually really like having these conversations with Lucinda. Normally, I would sit here and say, as an auditor, most people tell us that page 18, 19, 20, and 21 are completely worthless. It's not the way we do business. It's not the way we operate on a day-to-day. And I would totally concur that that's actually the truth. Lucinda is actually the first person I've ever really run across that was like, I love this statement. This is meaningful. And so what 18 and 19, what they do is instead of reporting things on a fund basis, governmental, separate from enterprise, it pulls everything together. And it pulls everything together, including the long-term assets and the long-term debt, which is not the way that you account for correctly, I might add, under your day-to-day accounting. Because the goal and the rules of governmental accounting are to have current taxpayers pay for current expense. So the fact that there are long-term assets and long-term debt doesn't affect your day-to-day budgeting. But these particular statements bring it all together so that you really can see in the absolute aggregate what is going on. And this,
I'd just like to add
yes,
something,
please.
if you don't mind. This is a private sector view of the municipality. Of course, that's what my background is, so I understand these statements so much better.
Right, right. So what you can see from this page, and I'm just really high level, $5 billion in assets across the governmental activities and business type activities. Of that amount, 4.6 billion of that 5 billion is tied up in capital. So you're very, very capital intensive. On the liability side, $2 billion in amounts that the municipality owes, and that includes all of the long-term debt, all of the bonds, all of the loans. And then your net asset is your equity position, ending the year with $3.6 billion. Out of that $3.6 billion, and equity is simply assets, what you own minus what you owe is what your net worth is. So your net worth is $3.6 billion, but of that 3.6, 3.1 is tied up in capital and infrastructure net of its associated debt. Over on the next page, 20 and 21, as Lucinda said, again, these statements kind of a private sector view, although for those of you who may have familiarity with private sector accounting, this format looks nothing like private sector accounting. But this format is laid out for a particular reason. And the reason that it's laid out this way is to show the cost of your operation relative to the user charges and fees that are supported by the people who use those services to result in a net number, which is on page 21, the total column, in about the center of that page. At the top of that page under that total column, what that means, that $537 million, that is the amount by which the municipality is incurring cost, providing services that must be supported by tax dollars or that must be supported by other general revenues that are not actually paid by user fees. And this format is laid out specifically for that reason. And although you do show $500 million worth of taxable support, you know that because you do the budget, so you know that going in. And this is not at all atypical for other governments to have that kind of significant reliance on tax dollars. What I would say again on page 21, the bottom line, net assets increased by $111 million at this aggregated view. Now that doesn't really mean a whole lot, but we'll talk about it a little bit with the fund level. So on page 24, we have the fund level financial statements, and this is the way you operate more day to day. So this really does reflect the way you operate on a day-to-day basis, the current payments, inflows and outflows, and there's just a couple of items I'm going to touch on here really briefly. Intergovernmental, that's your grants. There was a little bit of, despite despite the fact that there have been increases at the governmental fund level, which excludes the enterprise funds, there was a drop in intergovernmental revenue of about $50 million between 2009 and 2010. Also, investment income dropped pretty substantially, and that's following a rebound. 2008 was terrible for your investment income. 2009 really came back strong on the investment income side, and then we've dropped back down again in 2010. And as you drop down that column to almost the third to the, it's like the second to last line, where it says net change in fund balance, what that means in the aggregate is revenues minus expenditures actually resulted in an increase of fund balance by $50 million. However, if you look just above that section where fund balance did increase by 50 million, the issuance of long-term debt actually accounts for 100% of that increase, because the municipality issued $50 million of debt in 2010, which is actually falling to the bottom line at that level. So if you, I guess in short, if you back out the effect of the long-term debt issuance, it was more or less break even. Revenues equal to expenditures. And then the last page that I would point out is actually page 30 and 31. And this is the same, the income statement for the enterprise funds for the business type activities. And on this particular page, you can see that the bottom line actually had an increase in net assets of $55 million, or almost $56 million. But that amount is actually being significantly impacted by what's going on at the port, because the port actually accounts for almost $42 million of that increase. And that is specifically the result of a $40 million state grant that ran through the port in relation to the port project this year. So again, if you back out the effect, of that $40 million for the port, you're looking at about an overall increase of $10 million, and electric utilities doing well, water's doing well, wastewater's doing well, and port is near break even at an operational level. So, and that's really my report, although I'd be happy to answer any questions that you might have.
Thank you, Michelle. That's the next item on the agenda, and I'd like to start first with the audit committee. If anybody has any questions to our auditors, also known as Michelle, Drew. No? Any assembly members have any questions? Ms. Oceana?
Sorry.
That's fine.
The transfers to other funds on that line, can you help me with that?
I'm sorry, what page?
I'm still looking at the utilities.
That's the 40 million that you just referenced.
Well, no, I
Isn't it-
understand
isn't
that
it
one, but
page?
the transfers to the funds here, the 11, the 6, the 5.
Page 30 and 31.
Thank you.
Yeah, I don't have the exact, I do not have the exact numbers in my head at the standalone level, but the transfers out from electric, water, wastewater, MUSA accounts for a big part of it, the dividend.
I'm just surprised it's that big, that's why is that what it is, MUSA?
Yeah, MUSA, on the electric side, there's also the dividend as well. And there may be some other transfers
That's fine.
as well.
And then one other
Majority
question.
is MUSA.
Yes, MUSA, yeah.
Okay, thank you. And one other question. Legislators sometimes like to award funds that they intend for governmental use to private or nonprofit entities. And I wondered if that is potentially a challenge or a problem that we're going to have to deal with in audits later on. In other words, we get the assets, but the funding doesn't come to us sometimes. I don't know. Do you know?
Or we get the funding and the
Asset doesn't belong to us, right?
Well,
There's several times that's happened, and I just wonder how you deal with situations like that.
It can create challenges. I'm not sure of the specific circumstance that you're speaking
I
to.
can think of several.
But in just my general dealings with governments around the state, we're actually seeing this more and more and more,
Yeah.
where governments are entering into public and private or public and nonprofit type arrangements. And I guess I would say, does it represent challenges? Yes, it does on numerous levels. because every one of those transactions or every one of those agreements have to be looked at in both substance and in form of who's doing what, who's responsible for what, who's maintaining responsibility if the grant is in your name, but it's being sent off to a third party like a nonprofit, who retains responsibility for that money. And some of that can be delegated away and some of it can't. So every one of those transactions really has to be looked at in detail to make sure that you're appropriately capturing the information that you need to stay in compliance with the grant, or to make sure that you're staying in compliance with the proper accounting. One I can think of is you have a joint venture out in Eagle River with the Alaska Club and the condo. The town center, thank you. That one actually did create some challenges internally because as a general rule, municipalities don't do joint venture accounting. So this was one that had to actually be researched and figured out. So,
well, there was money given to a booster club, for example, to do some things, some infrastructure improvements to a public school district facility. And I don't know if that triggers anything that automatically you're aware of or not.
No,
Thank you.
Okay, Ms. Frascas?
Regarding the school district grants, is from an accounting perspective, is there a reason that they need to come to MOA on behalf of ASD? Or could they just, if we have the legislature, just appropriate them directly to ASD?
I don't think, I can't speak to what the state will or won't.
No, set that aside, but from an accounting perspective.
If you are the named grantee, ultimately you are responsible for the reporting of that, and it is pretty standard practice that the borough or the city actually does do the accounting so long as they are the named grantee.
But if the legislature said, instead of saying it goes to the municipality of Anchorage for Anchorage School District, it said the money goes to Anchorage School District.
If you could get the state to do that, then it would be responsibility on the school district side.
Okay.
Anybody else? I really appreciate that comment because I was thinking the same thing when it was said that this number for state expenditures is the school district also.
And the number of very small grants that require the same amount of reporting.
I sent over maybe 100 to 150 grants every 3 months.
Yeah,
it's significant.
Right. Okay, well, I have a couple of questions and comments before we adjourn this meeting. The first question is on page 2 of the audit committee report, and you state that, or suggest that the audit committee monitor throughout the year the process used to compute and record these accounting estimates. Can you elaborate a little bit on what exactly you think we should do?
Just in terms of touching base, maybe even on an annual basis, even as part of the audit prep, to look at what actually does constitute those specific estimates. And we did include on page 7 of this document, there's a list of some of the larger estimates that are in here, but just to make sure that we're not just, and I don't believe this is happening in any way, but just to make sure, oh, it's an estimate, it's not that serious, you know, it's the same as the last year, it's just rolling forward. But just to make sure that there really is a process in place to evaluate those.
And I think one of the ways that we could do that is to be in attendance at one of the progress meetings, whichever one that might be, and maybe you and I will work on that.
Sure.
For future audits. Okay, also, we talked several times about making a charter amendment to change the date that the audit has to be completed, and I'm going to work on that for the April ballot because things are different now. We have 600 grants and things are way different than in 1975. So that really needs to happen, and I'll have an ordinance done to take care of that once and for all. And also, were there any contract amendments for this audit?
Not at this time. There haven't been any. We're not 100% complete on the contract. There are still a couple of outstanding issues. The single audit, while it's printed, the federal submission filing hasn't been completed yet, and there's an agreed upon procedure. So to date, there have been no amendments.
Do you anticipate any amendments?
I don't think so.
I know it's a hard question, but I always like to know.
Yeah, I don't think so, but if there are, you will be the first one to know.
I really appreciate that. And the second one, Madam Chair, we need to definitely schedule with Ms. send a work session on GASB 54 because it's effective for a 2011 audit, so all of our colleagues can understand exactly what it means.
You want to do a whole body?
Oh,
instead of the
absolutely.
audit
No,
committee?
everybody needs to understand to do with fund balance, and that's a big issue for us. Okay, what else? What I'd like to do is just thank the municipality and the staff for a job well done. Really appreciate it, and thank you for a really excellent presentation. And thank you to all the committee members for being here and the other folks who are here. With that, the meeting is adjourned.